Imagine waking up one morning to find that your biggest international market, worth billions in sales, slams the door shut with a devastating tariff. That's exactly what Canadian canola farmers are facing after China's new tariffs threaten to reshape the agricultural landscape forever. In a world where global trade is a high-stakes chess game, this move shakes entire economies and raises urgent questions about the future of Canada's trade relations. If you're passionate about economic news or curious about how decisions in Beijing impact the Canadian prairies, stick with me. In this 12-minute story, we'll break down this trade conflict that's left thousands of families on edge, exploring its causes, impacts, and possible solutions, so you'll have a clear picture of what's at stake by the end. China has made it clear, we don't want Canadian canola anymore. Farmers in Alberta face a new reality after China announced a provisional 75.8% tariff on Canadian canola starting Thursday. For canola farmer Ian Chitwood, this tariff could mean the end of his sales to China. No Chinese company will pay an extra 75% to import canola seeds, he says. The tariffs hit at an already tough time for the industry, with producers grappling with tight margins. We've already applied fertilizer, spent money on this crop. We can't cut costs anymore, Chitwood explains. China has dropped a bomb on Canada's canola industry. The 75.8% tariff on canola seeds, effective this week, has thrown farmers, exporters, and markets into chaos. For years, China was one of Canada's biggest canola buyers, with exports valued at nearly $3.6 billion in 2024 alone. Now, that market has shut down completely. Farmers who relied on China are scrambling for alternatives. Many shipments are now heading to the United States, a shift that could disrupt domestic prices. Mark Carney is leading Canada's efforts to smooth relations with Beijing, but this move shows how tricky those negotiations are. The tariffs aren't just a number. They strike at the heart of Canada's agricultural economy, and the consequences are already being felt. China launched an investigation last September and had already imposed 100% tariffs on canola meal and oil earlier this year. The timing couldn't be worse. In the middle of harvest planning and contract season, farmers face crushing losses. China claims Canada unfairly subsidizes its farmers, but for producers in Saskatchewan and Alberta, that doesn't change the fact that billions in sales have vanished overnight. Markets reacted instantly. Canola futures on the Intercontinental Exchange dropped 6.5%, and experts warn prices could fall further. With China out of the picture, the U.S. becomes a lifeline. American buyers are stepping up to absorb the canola surplus, helping stabilize prices. This shows the U.S. can be a reliable partner in trade crises. However, Carney's negotiations with China are stalling. Since June, he's tried to resolve the conflict, but the new tariffs prove China isn't budging. Farmers and exporters are caught in the middle, hoping Ottawa finds a solution before the damage spreads. Trade Ministers Mander Suttu and Heath MacDonald expressed disappointment, stressing that Canadian farmers don't dump crops and that the government is committed to fair trade. But words won't recover billions in lost sales, and time is running out for those who counted on China. For farmers, the news is a gut punch. Canola is one of Canada's most valuable crops, supporting thousands of families across Saskatchewan, Alberta, and Manitoba. Many planted this year, expecting contracts with China. Chris Davidson of the Canola Council of Canada notes that the Chinese market is effectively closed. Farmers face unsold crops, lower prices, and a frantic search for new buyers. In agricultural communities, this is more than numbers. It's personal, it's livelihoods at risk. This tariff is the latest in a trade battle brewing for months. In 2024, Canada hit China with 100% tariffs on electric vehicles and 25% on steel and aluminum. China retaliated with 100% tariffs on canola meal and oil in March, and now 75.8% on seeds. Experts call it textbook retaliation, with immediate impacts. Canola prices plummet, storage costs rise, and smaller operations face financial strain. Importers are struggling to offload canola to markets like Southeast Asia or South Korea, often for livestock feed, but at much lower prices. Shipments only move if sellers slash prices by 30%, meaning millions in losses. These hit trading companies first, but the ripple effect reaches farmers and cooperatives. It's not just about balance sheets. It's about keeping operations running, paying staff, and planning for the next season. Ottawa's strategy seems slow and reactive. Saskatchewan is hit hard, and Premier Scott Moe demands immediate action. This blow will stop significant trade with China, he said, announcing plans to travel to Beijing for direct talks. Federal officials are exploring emergency measures like short-term storage or market diversification, but details are vague, and farmers need clarity. Carney's track record raises doubts. With the U.S., he promised to end Canada's one-sided relationship but failed to secure a strong deal, conceding more than expected. Farmers wonder, if he can't succeed with Washington or Beijing, who can he negotiate with? Bad deals hit Canada hardest. Long-term, relying on one market leaves Canada vulnerable. Farmers must rethink where they sell and how they plan crops, while exporters seek new markets to avoid future shocks. This crisis shows that in global trade, even careful planning can lag behind swift moves by powers like China. That's all for today from the Zone Media Network. Check out American Zone for more news. Don't forget to like, subscribe, and comment. Do you think Canada should take a tougher stance or seek more dialogue? Share your thoughts. Your voice matters. Stay informed.